morning, Michele. Thank you very much for coming here on this value creation in life sciences series. So to start with, if you could give a quick short introduction, your track record and what made you to come into the world of investing.
Sure. So my story goes back at least 10 years in the field when I joined a big family office in Italy that belonged to a big pharmaceutical company called Tambon Pharmaceuticals.
Mm-hmm.
The idea at the beginning was, of course, to manage as part of the wealth a big portion in private investments. And one of the strategy that the family had envisioned was exactly getting more inside early stage investing in life sciences. So we started really slow, I would say in silent mode. So we started making investments, and we did pretty good. And at the beginning it was a time in which after the European crisis, there were interesting opportunities both in the US and Europe. And we did lots of investments, mainly I would say in the later stages of the value chain. And then we decided a couple of years after, that's 2017, that we wanted really to start making investments in the early stages of companies, because we saw that there was a lack of capital, mostly in European region. There was really offering some kind of interesting opportunities that nobody was really taking attention to. And so we started with several companies. We sourced many. Of course, the network of the pharma companies, it's big, and we started making investments. So we did. Initially, we thought about using a sort of a barbell approach. So on one side, we had really early stages. I mean, in almost research projects. So really things with super high risk. And then at the end of the other part, at the end of the bell, then we wanted to have something which was in a way trying to diversify, so sort of decrease a little bit the risk. Of course, that was still there because we're not talking about companies which were making drugs already approved on the market. So things in the medtech space, in the drug device combinations, in AI for drug discovery. So we did this from 2017 to 2020. In 2020, we decided we wanted to make this more, I would say, formal. So we spun out all the investments we had made before, from 2015 about to 2020, and we formed an entity which is called HTH. You can find it online. It stands for Health Technology Holding. We didn't want to have a fund. We thought that the structure of a fund, so 5 years for investing, 5 years for harvesting, and then 2 years of possible extensions, was not really fit for what biotech and medtech are in terms of life cycle of these companies. So we thought that really having a company which was thinking more on the long term was a better strategy to reap all the fruits from the companies that we were investing in. And of course, innovations take time, especially in biotech and medtech. And so really we decided to have this holding company rather than a fund. So the holding company, it belongs to the pharma family, and it's all financed so far by ourselves, and that allows us to have more flexibility on the way we move. That might change in the future, of course, but it's a good way so far to understand whether this strategy makes sense or not. As a track record, we did a lot. We sold. We were one of the first investors in a now famous and listed company in the Nasdaq. It's called Royalty Pharma. They did a very clever strategy back in the days. They were basically offering to universities and research centers money for the royalties they had with products. And I remember that they had Keytruda, one of the biggest I think it was a monoclonal antibody, but one of the biggest selling drugs in the world, and that was a very successful investment up until the IPO. That, if I remember, what was back in 2020. So this is one of them. The other thing that came out positively, of course, we don't ask for any special rights from these companies we invest in, but the synergy between HTH and the pharma company, in the past, they brought some interesting opportunities on the table to make partnerships and co-investments, and and further develop the strategic rationale of the big pharma company. So that's really in a nutshell. I can speak hours, but that's it.
Mm-hmm. Thank you. So I have asked this question to almost all the investors who have come here, especially those involved in early stage investing. My point is that how do you really evaluate at that early stage that this could be successful? How do you make that bet on that asset?
Yeah, so that's a $1 billion question, but anyway, let's try to get an answer to that. So we try to follow sort of the art and science approach. So we try to be as objective as possible when we look at opportunities. So what we really do a lot is interviewing physicians and practitioners. So when we get an idea from a founder, the first thing we do is we try to validate the market and the medical need. That for us, it's the most important thing that it's needed at that stage. So we need to have clear in mind what's the size of the problem. Is there a problem, of course, and if the solution that these guys, the scientists, provide, it's feasible to solve this problem. So that is really, I think everybody's doing that, but we're really trying to put a focus on what these physicians, these practitioners say about the medical need. So that for us, it's the first step that we want to understand. Now, of course, understand what is the market. So assuming some kind of level pricing in the future, understand what is the potential. Now, then it comes a part in which we try to assess whether the founder or the founders, in this case, are the right ones to solve this problem. So one of the things that I learned on my skin is that you can have the brightest idea, but if you don't have the right team to do it, it just is an idea. So
absolutely,
or it becomes a product, but you're not selling it.
Completely agree. Yeah.
So the where we put a lot of focus now, it's on the behavioral part of the company. So we try to understand the entrepreneur and the scientists becoming entrepreneurs in our case, whether they can be suitable in the future, not only to lead the company, because we don't think these companies will be run by these guys, but if they are, they understand that at some point they will need to take a step, well, not back, but aside, step on the side, and have a proper management come in. That is one of the things that we try to understand the most. So the openness of these people to get talented management with experience to come inside the company and manage it. That is one of the most important things that we look at. We don't believe in the founder makes it all, Adam Newman style. These guys, Travis Kalanick. I don't think in biotech works. It's not on medtech works. It's not the case. So we really look at how these founders will develop in the future. We do interviews, reference calls with people, work with them that I worked with in the past. So it's a lot of time is spent on that. We spend time with these founders, leisure time. We go having dinners with. We try to spend a couple of days together to see how they behave, what's their way of approaching other people. So that is very, very important, and we didn't do it in the past, and we actually pay the consequences, because we found out that some of these men or these founders, they are not that open to really outside management. And then, of course, the technology part per se, it's important, of course. So we need to understand if this thing is feasible, but in a way, we have to take this leap of faith, right? So we do this. We take the technology risk. So, and the market risk, of course. So we have to trust. Yeah.
Can I ask you one question regarding the reference check you have talked about? Because we are talking about the behavioral part. In general, have you ever received, while doing a reference check, an honest answer or a biased answer? What I mean by that is that in general, we wouldn't like to hurt anyone's career, right? So yeah, I don't know, as a human being, if you try to cross check with somebody who has worked in the past, how is it possible to really determine whether the opinion is a kind of a biased one to kind of protect, or is it an honest one? Maybe it could be an honest one only if the relations might have been strained with, let's say, the founder. Have you been into this situation to kind of understand really?
It's a good question. So it really comes down to the questions you ask. So you don't want to be too general. So when you ask references, it's this is not rocket science. I mean, you have to try to make the right questions to the person you're interviewing. So, for example, the one thing you wanted this to get personal, but we asked them not in this way, but did you ever get in a fight with this person? Did you ever have sort of a I don't know, misunderstanding? Have you seen some how these people behaved in the group? So we try to be general but precise, and that it's and you see when the people in front of you kind of answers in a way that you're suspecting that it's not true. You can, in a way, can sense that. But of course, that bias will always come. Now, nobody will tell you that the founder is a son of a bitch. Well, it may happen, but it's and in fact it did happen. But it really comes to the people you're interviewing. So for example, scientists and physicians, you're not asking to patients, you're asking to colleagues. So you're asking for references, and of course one of the biases that you have, it's when you what the person that you ask reference for, you ask directly to them, say, okay, so please give me a reference, and of course they will give you only the positive reference. What the hell would you give me the negative ones? It's it's counterintuitive. So then you try, when you interview these people, which are the main reference points, you say, okay, do you know other people that have worked with them and didn't and we didn't speak to? So that is what we try to do. Of course, it's a mitigation strategy. It will never fully work, but trust me, it gives you a lot of a idea on a person's own attitude. And managing a company, it's not managing a team of scientists in a university.
I think one of the interesting questions, I think, which I also learned, that what you could ask is, given a choice, would you like to work with him again? I think this is a very tricky question, which actually tells you whether, of course, he still may not be able to answer maybe 100% honestly to kind of protect that, but at least it will give you a signal. So that
is very true. Actually, I think that for us as venture capitalists, or well, I don't like the name anymore, but as investors in companies and founders, mostly the behavioral part, I think it's the most important one. It's where we try to spend a lot of money and a lot of time, not money, also money, but a lot of time in, because it's making the right questions. There are many things, many research papers on behavioral aspects of behavioral economics, the way people behave. I think it's worth taking a look, and for us, it's important. We do want to avoid the mistakes we've done in the past, which were not related to technology. I mean, I'm fine if technology doesn't work. It's a risk. It's okay.
Correct.
But where I really find myself struggling and say, God, I've done this wrong, is when I get the wrong people. That is that means I've done something wrong in my diligence.
Perfect. So I think, that's, I think, a part and parcel of the learning process, right? Because I think unless you fail on some ideas or aspects, you won't learn. So
look,
so
it's a sector in which you do 10 investments, one goes right.
Yeah, exactly.
But everything has to go right.
That's true. So, I think last week you were in US, if I'm correct. And I just wanted to get a sense of the biotech market right now. So, as you know, last year, the biotech market crashed and there was a lot of panic and so on. And of course, as the panic, it kind of percolates across all investors, community, and all that. So I want to get a sense from you that based on your interactions with other investors, uh, what do you sense about the current market today? Are they still, are there, is their investing strategy or style the same before the crisis, or is it like you see a sense of nervousness or something like that right now?
Sure. So yeah, I met with several funds, early stages and late stages, colleagues, I would say. So let's divide the market in two parts. There is the really early stage part and the late stage part. So let's start with the late stage. So one always starts from the bad one. So there I can feel the pressure. I mean the market as so the flood of money that came in the market with this tourist investors that have pulled up valuation so much have created a situation which is sort of a catch-22 now. So we have these companies, some of them they have very good assets. So some companies working on gene editing, gene therapy, which have been listed, which are trading way below the IPO value, which was probably inflated. So I see on the latest stage part of the market a little bit of reluctance of making new deals. There is patience. So I kind of get that people are staying in the window and look what's happening. Lots of investors have gone out. I mean, all the tourist ones that invested in biotech was fancy back during the COVID times. They all pull out. So there's no money there. So I think it will need some time. Now, investors, they say it's going to be on the back end of the year, on Q4 2023. I'm skeptical about it, honestly. I hope I'm wrong, but I'm skeptical. I think what's happening there, it's healthy. I mean, lots of these companies, they don't really make sense, and will ultimately be going belly up. So on that part, I see nervousness. I mean, when there is nervousness, it's probably the best times to make deals. So we see actually ourselves in another part, we're looking a lot of listed companies which have been indiscriminately beaten up. And I think there are funds there that are looking actively. And some of them, they confirm to me that they're starting to evaluate building up positions in companies listed. So on the late stage listed, it's or nearly listed, it's bad. Also in that part, so companies in clinical phases, phase 2, phase 3, late stage medical devices, they are struggling a little bit getting money. So that is the sense I got. There is some level of patience. I think it's mostly due to valuations. So I don't know this for sure, but we'll know in the future. But I think that they raised the latest rounds at higher valuations that they should have raised, and now I think they're struggling a little bit in raising new money, justifying that kind of valuations. So I'm seeing down rounds pretty big ones,
Of course.
actually.
Yeah.
So one company a couple of months ago, they were raising last year 60 pre-money. Now they're 35. So it's a big slice. So that is what's happening on the late stage, but definitely lots of interesting opportunities there to take out with limited risk. So
As we are talking, one question comes to my mind is, as you know, last year, some of the statistics we got from the US-based companies was that their market cap was less than cash and so on, as you might have read and so on. I was just thinking out loud that do you see that, is there any possibilities where the companies, let's say their market cap is very low or the asset has failed or something like that, but the companies have cash, and that could result in any reverse merger deals between European companies and US based companies? Because I see that there are two ways right now. Imagine if the asset has failed, one of the options is that the CEO decides to return money to their investors. One is that they could see that as a strategic fit. Imagine you are working on, I'm just inventing, oncology.
Yeah.
And on, you see some sort of strategic fit with another European company, for example, where do you see that, a chance that, the companies or investors there in US are open to this kind of deals?
So I haven't, honestly, I haven't been speaking about this with these people. We had another discussion about the fact that these companies were trading below cash value, but I give you my idea. So I think for companies listed with cash, with failed assets, so with the clinical trials that went wrong, I think lots of them are probably on the hunt of other assets in Europe,
exactly.
or US, for that matter. So I think it's definitely happening. It's what would you say, that it's a little bit tough because these companies, they still have huge burning rates, so they were listed with cash, but that cash, it's basically not valued by the market, because the burn rate these companies have, whether they have clinical assets or not, it's anyway big. So I think it will make sense for them to look at and acquire, possibly, or licensing drugs. I think some of them are doing that. But again, Sarab, I think it comes down on how good the asset is.
Correct.
So I think having a reverse merger makes sense for some European companies. Then, of course, you will have to mix the management. It's not that trivial, but I see a point. One thing that came up, though, I think it's interesting, as I also work with the pharma company on M&A. So everybody's talking about the fact that these companies are trading below cash value or near cash. They might be targeted for acquisitions. I agree in a way. I also think that pharma companies are being smart and waiting, because they know that these companies will eventually have to accept possibly a lower deal, a lower premium that they would accept now, because just they will run out of money and nobody will give them to them, or we will be forced to make some capital raise and dilute dramatically all the investors. So I think there is some the companies are out for fishing, but they're waiting to see how things unfold. With reverse mergers, I think you have to be very, very, very selective. That might happen, but lots of there are lots of things that in the middle to be done.
Perfect. So let's now switch to another interesting aspect about remote working.
I didn't speak about the early stage.
Oh yeah, sure.
I will spend a couple of minutes there. I mean, everybody I talk to, they remain very positive. I mean, they see very good signs coming out. The valuations on Series A are coming down, and they're much more reasonable. So there, I must say, I see optimism. So in the early stages, I didn't see things changing dramatically. Companies are being formed. Good science has been financed. So I think on the early stages, it's the situation is still good. There is lots of good science coming out at probably a little bit more reasonable prices. So I think on that part, I see lots of optimism on that side.
Perfect. Thanks a lot. I think that's at least a good news for all the early stage companies who might be nervous in raising money right now. So, in 2020, when COVID struck, I read a very interesting article about how, as everybody has started working remotely, could stifle innovation. Okay. And there was this article was related to why Silicon Valley is what it is, because people go out in bars and chat and and all that stuff. And recently, the ex-CEO of El Nilam, I think John Maragnore, or how do I pronounce it?
Yeah.
He also wrote one interesting article, which I read, where he also talked about that the biotech community should now get back to office to work. And even my point of view, of course, as we are more strategic, while working with in the companies. For us also in a service or let's say consulting environment, this impromptu interactions, and that allows us to come out with creative ideas, because we cannot say that, hey, come on Zoom, I want to discuss something. It doesn't happen like that.
Yeah.
So what's your opinion, first of all, about let's say all your portfolio companies? Are they working remote, or it's a mix, or and how do you see that this point?
So it's a very good question, actually. It's a thing that we've been thinking about a lot. So look, we don't have remote only companies in our portfolio, so it's not a way of working that I like. I think that you need to come up. I don't think every day it's needed, but I think you need to come up together and share ideas, and also live together the company. It's in the end of the day, it's a mission for everybody to accomplish. Now the tricky part, I think comes down to where you are. So look, I take the European point of view, which is very different from the US. So in the US, you have these very big clusters, so Boston, San Francisco, now Durham. It's getting interesting. New York. So there, I think it's easier because everybody is there, right? So you have people which have experience. All the pharma companies there, and it's easier to get talent all together in the same place, right? So it's easier for companies to be together and work together. And I think that is that's one that is for me the most advantageous point. So the most positive points that these clusters have, and you have all these mass of people, expert, they know each other, they know the industry, they've been working on that for 30 years, so they know a lot, and it's very, very important, and they can be working together, and that's perfect. And I guess it's for a biotech company, not every day again, but sharing ideas, solving problems, how do we get this done? So I think it's important. In Europe, it's a different story. I can speak for Italy and other countries that we invested in. It's not that easy to find proper management teams that are willing, even if you pay them, to come to a remote city of Italy, even if it's beautiful. So remote in a way, it's mandatory. It's not. It's not really a thing that you can choose, right? So at least for the companies we've invested in Europe, I see France is a little bit different. France, they have a little bit bigger heritage on the biotech space. So we have a French company. They all work together. They are 3 days in office and a couple of days out. So again, kind of hybrid. But I think that for early stage companies, definitely sharing, time together, it's important. Now there is another aspect that it has changed a little bit, the biotech industry over the last 10 years. So now I think you can run a full biotech company with 4 or 5 people in the early stages, because you basically outsource everything, right? CROs and consultants for everything. Whereas in the past, you need to set up labs, do experiments by yourself. Right now, we have biotech companies. They don't have labs. They just don't.
Yeah.
So it's so in a way you can manage a biotech company from a bench, a normal bench with a laptop. So I think, but we need to have the minds together to work and say, how do we solve this problem? Why did it come out? How we improve this? And so I think I don't like the extremes, full on in the office, full out of the office. I like to stay in the middle, because I do believe that people, and especially people which have been put under a lot of stress, because biotech is stressing, and medtech as well. I still believe that some sort of a work-life balance, it's important. I see founders getting a lot of stress, and ultimately their performance is going down.
Correct.
So that's my take. But again, I think nobody has the answer on that, and in each company is different from the other.
Yeah.
I don't think you can generalize that much. That's
Got
my
it.
take.
Perfect. So we have actually a lot of questions, but we are running short of time. So maybe I'll ask you the last question.
Go ahead.
So what would be your, let's say, any thoughts you can share with all these companies who are raising money in this tough time? What would be your advice, either for those companies who are raising for the first time, or those companies who have already raised and they are trying to raise another round, Series A or Series B, something like that?
What advice? So I don't want to sound repetitive. So on the latest stage, it's the message I gave to my companies. It's be strong, try to save a lot of money, so cut every non-necessary expense. So this is the time in which you need to be in saving mode, because the market is closed and almost closed. So it takes a long time to raise money. So extend the runway as much as you can. Deprioritize some programs that you have, but are distant from an inflection point. So focus on things that have an inflection point which is nearer and will give you a increased chance, a increased possibility of raising money. I like very much the base theorem, right? So try to update the value based on the milestones that you can reach in the short time, and focus on main progress with close inflection points, and get on with fundraising. A lot of effort on it. And third, try to get some partnerships with pharma companies and meta companies, or if you're a meta company. So these partnerships they can be valuable in the long time, and it can be also very accretive. And that's on the late stage. And it's tough. I mean, we have good companies with very good assets and good teams that they are really struggling. So that's and then of course looking for non-dilutive money, but that's the thing they should be doing on a daily basis. I think for getting more cash. So that's on the late stage. On the early stages, I think the market is still there, and it's looking for good science, good opportunities. So what we always look as for companies to bring us not only the good science, but also an idea of what the team and the company would look like after rounds. So I think there it's proof that your science and your and the way you want to build a company makes sense. I think at the beginning all comes down to the science and team that you're assembling for it. So those for us are the really important things. Money is there, will come. It's then I wouldn't say other things. I mean, you could go to Twitter. There are many VC funds and managers are telling you what to do. It's I don't want to sound repetitive. So save cash.
Perfect. Super.
That's
excellent. So Michele, it has been a pleasure talking to you. Thank you very much, and we'll stay in touch.
Thank you.